time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk craze. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regard, dear, it's all downhill from here. Real life, remember how it was. Tom G, Michael Jackson, all in shit. Say what up to Benny, the shoe. Say what up to Benny. Say what up to life and mortality. So sweet, which I might like immortality. This is life, life, immortality. The way every day goes, every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. Regard, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk craze. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regard, dear,
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 8th, 2023. And we are in this 18-day accumulation channel, at least what I believe to be an accumulation channel, or more specifically, a re-accumulation channel. The original accumulation channel, obviously, is this massive 234-day accumulation channel, accumulation of all of this supply, okay? So a reaccumulation channel is, in Wyckoff terms, simply it's serving the same function in a sense as the original accumulation channel and absorbing any kind of leftover supply at another level, on a higher level or on a higher level, right? Because it's reaccumulation, not redistribution. So there was tons of supply dumped on the market, right, for 400 and some odd days. In the bull market, impulse down. You accumulate for 234 days. You mark up and break that channel to the upside, retest it as support. You mark up and break this 434-day downtrend, okay? Since November of 2021, the Bitcoin price has been going down. That was broken right here. And essentially what you're doing is you're now reaccumulating, because anybody or any kind of any sort of supply that's left over in the market, right, from somebody selling just randomly to, people still thinking that, like Garrett Soloway, for instance, still thinking that we're waiting for a $10,000 to $12,000 Bitcoin. All those people who are selling into this move get reaccumulated at this level for 18 days, okay? And this is really, really, really strong. This is really, people think that this isn't bullish. People who think that this isn't bullish don't understand price action. They do not understand what's going on. Because once you accumulate, any accumulation is a cause which has an effect, and that effect is the markup, the subsequent markup. Any reaccumulation is a cause to the effect of a markup. So basically, that is essentially just telegraphing the next big move, okay? Now, we're going to get to why exactly am I saying that this is the end of the 18-day accumulation, right? How do we know that? And obviously, we don't know anything for sure, but with a high degree of probability, we can speculate that this is likely, okay? So obviously for that, we go into the smaller time frames, actually even smaller time frame. Let's go in the hourly time frame. Okay, and first and foremost, now we're looking at this as a reaccumulation channel. Let's get rid of the momentum indicators because I don't need them right now. And this is a channel, right? At the end of the day, let's keep everything simple. It's a channel. So if we're trading channels, what do? We know that the bottom is support, the top is resistance. There's a lot of traders, some even who are, better than bad. They're not bad traders, that's what I'm trying to say. They're not bad traders, they're not bad technicians. But a lot of people are bearish here. But that's fundamentally flawed. Why? Because you're at support. You don't get bearish at support. Here's when you get bearish. When you're at support, you break support, you retest that break as resistance. This is where you get bearish. But technically speaking, like people getting bearish on support, once again, they deviate. Maybe they know this, but they don't really understand it. I always say, understanding is practice. You can't say you understand something and then do something else. You don't understand something and then contradict that understanding with an action that belies that understanding. You don't understand it. True understanding is a deed. True understanding is action. You're actively practicing that. If you understand the really useful principle of support and resistance, and breaking support, retesting it as resistance in a bearish move, breaking resistance, retesting it as support in a bullish move, then you can't get bearish here. Okay? It's not difficult. You're at support. This is, once again, an 18-day accumulation channel, or let's just say a channel. Let's not characterize it. It's an 18-day channel. So you have 18 days worth of data, and you have 1, 2, 3, 4, let's say 4, 5, 6. You have all of these data points, okay? So if you're trading this, what's likely to happen once you come down to this region? More of the same. The only thing you can do, the only time you flip that is if you come down again, break that support, prove that, okay, this support is no longer held, then you could come back. You have to come back. You would have to come back, retest it as resistance. Then you know that this is distributed. This is a distribution channel. Do you understand? So again, keep things simple, but people aren't consistent. A lot of people that were calling for this to break down, or are calling this for this to break down, characterizing this as a distributive channel, may have heard that. They may have said it themselves, right? But for some reason, they're not practicing that. They're still like, could go up, could go down. No, at this point, given that you've held support for all of this time, you've held support in this move without even going into the details, the particulars of what this move is like. We're going to do that in a second. You already know you're at support of an 18-day range. You're likely to go up. The other thing is, if you zoom in, let's go on the 15-minute time frame to this portion, what do you see? Every single time you've come down here, you get wicks. You get some strong wicking. Okay, so this should not surprise us. We have established a trend where some people, some traditional traders would call this an order block, right? This level is a level of liquidity. When price comes down here, it reacts. It comes down. It reacts. Comes down. It reacts. So we came down. We grabbed liquidity from this area and reacted. Okay. So this, again, there are ways to trade this. Here, I'm gonna give you a little. It's not a trick, but using Elliott wave theory, you can actually trade these corrective patterns. I would not advocate. Let me just say this. I would not advocate trading this up and down. That's not what you do. The smart thing is, and I heard some people talking yesterday on their, I'm not going to say who, but I watch other traders just to know what people are thinking. Some people are like, yeah, it was the FOMC, announcement by Powell or whatever, and I knew that we're going to long this and short this and long this and short. Like, that is so silly. It's high risk, and it's not really good practice. Even if you're a day trader, it's not smart. I guess if you're a day trader, you close your books, when trading's over at 5 p.m., but crypto's 24/7. But that's still a bad strategy. The best strategy is to zoom out even a little bit, okay, even a little bit, and realize that this is a big channel, and you want to buy support and sell resistance if you really want to trade small time frames. But trading this up and down is weird. It's weird, and it's a low probability affair. As you can see, in the past few hours, we've gone up a lot and down a lot. A lot of volatility. Up, down, right? But there's a narrative, there's a story, there's a why to this, right? Using Elliott wave analysis, specifically A/B basing, we can understand why the price is going up and down like this. It's because this, in and of itself, this small range is another mini accumulation channel. Okay, and we've talked about this before on the channel a great many of times. This is what you would get. So let's zoom out first. Why do you have these accumulation channels? First and foremost, in order to, let's go out to the 4-hourly time frame. So you trended, okay? You trended for a little bit, you know, most of January, you trended up. Then you came into this accumulation, okay, or reaccumulation, whatever you want to call it, this channel. Once you're at the bottom, you want to mark back up and continue this trend. How do you do that? Well, first, you have to change this mini trend. You have to change the character of price action from down to up. And what I always say on this channel is, if you really look at price action, you really study price action, even if you don't know anything about A/B basing, Elliott wave theory, you understand that price doesn't just flip on its head. You don't just go up to down and down to up. You need to process things. You need to absorb supply or distribute supply before you change trend, right? Absorb supply to change trend from bearish to bullish, distribute supply to change trend from bullish to bearish, okay? So here you distribute it a bit on a small time frame, but it's still distribution. So you're going to need some accumulation. This is why you have that mini accumulation range, okay? So now, looking at this, using Elliott wave analysis, Elliott wave theory, specifically A/B basing, we have a tool to really examine and understand why we're going up and down. A lot of people don't know any accumulation range. The Elliottians who understand A/B basing could tell you why it's going up and down. Also, the people who study Wyckoff and accumulation ranges can tell you exactly why it's going up and down, right? 2 degrees of A/B basing in a pivot, according to Elliott wave theory. 1 degree, right here, an A wave and a B wave, okay? Every corrective wave has a counter. They all come in pairs, right? That's just a natural thing. Just like there's a light and dark, and you know, the sun and the moon, and up and down, and left and right. Any corrective pattern, every A wave has its B wave, okay? So you have 1 degree of A/B basing here. You have a 2nd degree of A/B basing here, another A wave, and another B wave. And this is your pivot, or your final. And all of this, 1, 2, 3, this flat correction is a B wave. That's it. So this is actually what I read this morning. I saw this. Once I saw this, I knew, okay, what comes next is either one of these, a B wave that looks like this, a 3-wave move like this, or this composed flat correction. And when I saw us coming up and down, back down this morning, I'm like, okay, that impulse is going to be the impulse of this flat correction, this C wave, and it's gonna go a maximum of the phi ratio of this A wave. So if I take my Fibonacci retracement tool of this A wave right here, of this pivot, I know that the maximum, if this is a valid count, right, the maximum retracement for this B wave is all the way down here, the phi ratio, which is 22,266 on this chart. Okay, so actually, with this knowledge, not to say that all your reads are going to be perfect, but you can even trade these things, right? And by trading, again, it's not trading up and down. It's, okay, if I'm to make an entry, right? If I want to buy support, where do I hide my stops? Where do I hide my liquidations? Behind the phi ratio, okay? So that's another useful tip. And that's kind of why we not only study this stuff, but we trade it. We use this understanding to trade. And yeah, that's pretty much what I see on the charts. And following all of that, I think we got some sort of confirmation that this is a likely read on what actually is happening on the charts, because you got a strong response from this order block, from this liquidity level in this move right here, this move up, okay? So you have what looks to be, let's erase this. You have what looks to be some sort of impulse at this level. And maybe on a small time frame you have 5 waves there, and maybe on a small time frame this is a 3-wave move. In which case, the original impulse, right? The original impulse, and by original impulse I mean this. The original impulse that you got into this whole channel with 18 days ago may be resuming right here in this impulse. 5 waves up, 3 waves down, 5 waves up, 3 waves down, 5 waves up, 3 waves down, repeat, 5 waves up, 3 waves down, continue, right? Degree after degree. So this is, I guess, what I'm looking at right now. I'm trying to figure, okay, is the AB basing, is all of the corrective price action finished, and are we going to now be back into impulsive price action to the upside? So that's how I'm reading impulsive price action to the upside. So that's how I'm reading this move on Bitcoin on the small time frame. And yeah, that's also how I'm trading it. Conksha says, hello, how are you doing? I'm doing very well. Hope you're doing well as well. Okay, so that is Bitcoin. All right, so like I said, we are expecting a bounce now, because as we know, if this is a 5-wave move, if this is an impulsive move, the counter should last just as long as, just about as long as the initial wave, and the retracement shouldn't be much more than 0.618 Fibonacci retracement of the original move. So right here, we should hold the 0.618 level, the phi ratio of this move, if this indeed is the start of the impulse up and out of this support level. Okay, so yeah, let's have a quick look around the markets to see what other altcoins, are doing rather, and if they're reacting in a similar manner on the small time frames. Okay. So this is Cardano, and on a small time frame, you did get what looks like a 1, 2, 3 flat correction, ABC flat correction, and an impulsive move and a retracement from that level. So it looks like Cardano's also doing something similar. Algorand, this is a little different. I think you have here, is it different? Yeah, Algorand's a little different. I think what you got here is some sort of, is this, I'm trying to see something. I feel like that is way, yeah, no, that's not possible. This then is some sort of retracement, intra-wave retracement, right? Kind of like a wave 1, wave 2 retracement, right here. And somewhere here you have a 5-wave impulse. Somewhere here, this is like a 3-wave move. Maybe this goes on a little longer because the time here is not concordant. I'm not exactly sure what's going on. In terms of support and resistance, though, you broke important support and you retested it, or sorry, you broke important resistance and you retested it as support. So that's kind of the story I'm seeing. But in terms of Elliott Wave, I don't really know what that is in Algorand. Maybe it's a 5-wave up, 3-wave down situation, wave 1, wave 2. But if that were the case, then this probably goes on for a little longer, just to equal out the time factor here. Bonk, This is my, again, favorite shitcoin. Looks like it's just ranging in what seems to be another accumulation channel, right? Initial break of structure, A wave, B wave, first degree, A wave, B wave, big B wave, second degree, and then maybe this is your pivot. But that's what it looks like to me. That looks like an accumulation channel. A dent. Don't know. Oh, yeah. Okay, wait, let's zoom out. Okay, that's a possibility. It's hard to say. Hard to say. This is hard to say. I don't know. I just see a bunch of corrective waves, right? In flavors of 3. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay. What this all means, I'm not exactly sure. But the fact that you're correcting up and to the right is very bullish. So I'll say that much. This in Dodo looks like a very nice RS flip. Again, changing or turning important resistance into new support. And I think this is clear right here that you got some sort of let's see, some sort of 5 waves up, 3 waves down. There's 5 waves up, 3 waves down, and then this looks like a flat correction right here. But you're turning that resistance into new support right there. Just bouncing off of it is very bullish. Dogecoin. So this is an accumulation channel at support. That's what that looks like. You see a lot of buying being done right there at that support level. Even though you have a wick below, it's a strong move. Same with Ethereum. And I said this yesterday. Ethereum is that bullish that it doesn't even need the support of this structure to build its entire accumulation range. It's building its accumulation range on its own support level. Okay, but this to me looks like clearly an accumulation range, and you're finding support right here. You're finding liquidity right here for a move up. So yeah, this is bullish. Litecoin finding support at the bottom or of at the support level or the bottom of its larger structure, that rising wedge. RSR, we talked about this. You broke this important level, right? It was resistance. You finally broke it. Okay, and what am I talking about? The midline of the channel, the bear market accumulation channel. You broke that to the upside, retesting it as support in that move. So this is bullish. Oh, SHIB, that looks like a very, very nice 5 waves up, 3 wave down move. That's all that looks like. Okay, a lot of people call this bull pennant. That's what that looks like. There's nothing bearish about that. Synthetics. This is another version of a bull pennant. You have an impulse and you have a flag, and that flag is consolidating up and to the right. Okay? You just have a series of corrective patterns. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, right? And again, if you're reading it in terms of AB basing, you have 1 pair, 2 pairs, that's the second degree of AB basing, and then a pivot. Wait, am I confusing myself? Yes, I am. Let's see. Let's just try that again. That's 1 pair. That's 2 pairs, right? Like this? Okay, yeah, that's one pair. That's two pairs. That's the pivot. There we go. Okay. Tron, you broke resistance, turned it into support. There's nothing bearish about that. Okay. XRP, you're consolidating above that midline, which was resistance, now turned into support. Nothing bearish about that. This whole range is accumulation as I read it. Zilliqa, look at these wicks. Look at these wicks. I mean, that just shows you there's so much buying pressure. And also, again, you have what looks like a 5-wave up, 3-wave down move. Nothing bearish about this. People mistake the counter trend for the trend. If you want to figure out where to trade, what direction to trade in, you look at the trend and you try to enter or mitigate or protect against the counter trend. That's trading. That's it. You want to trade trends and you want to watch and read the trend and distinguish it from the counter trend. That's it. Trend, counter trend, trend, counter trend, trend, and so on and so forth. Okay, another example in VeChain of a 5-wave up, 3-wave down move, and then now it's continuing. Okay, but again, if you zoom out, if you zoom out, what do you see? It's just a series of corrective waves. 1, 2, 3. Actually, it starts out here. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5 probably. This is 5, 3, 3, 3, 5, 3. It's just a series of corrective waves. Read it as you will, but what's true of most of these corrective sequences is they're up and to the right, which is bullish, higher highs and higher lows. Secondly, they are all intra-wave, meaning they're counter to the original trend. The larger trend is up. All of this is counter trend. Even though it's up and to the right, it's counter trend. Because it's corrective, not impulsive. And so this is why a lot of people are noticing that altcoins are doing really well despite us being corrective in Bitcoin and just in the whole entire market. For the past 18 days, we've been in correction, but still altcoins have been gaining ground. How? They've been increasing in market share or in market cap because they've been correcting up and to the right. There's nothing more bullish about that. If you look at the story, you zoom out, think about it, the story is one of very strong bullishness. And so you should expect all the support levels to be held, all major support to be held, all major resistances to eventually be broken. Again, data, that's what you see. Correction in 3. I would actually say that this is one big correction like this. That's how I read that. I would say that this is a 5 waves up, 3 waves down situation. This is what do I see? I would say this is a 5 waves up, flavor of 3. I think all of this is a massive complex correction. WXYXZ. So that's how I would look at that. But again, just a series of corrective patterns up and to the right. Eventually, you're going to be breaking these rising wedges. Nothing bearish about that. Look at Telcoin. Look at Telcoin, my friends. Breaking that bear market accumulation. That's huge. When did that happen? That happened yesterday. Did I notice? I don't know. When did it happen? Yesterday evening. I guess I didn't even notice. Okay, so breaking the bear market accumulation, that's a huge, huge, huge deal, right? For those who are newly subscribed, welcome. These purple channels are huge, huge levels, okay? I've drawn pretty much all the charts. I've marked all the charts up with these purple channels of really important support and resistance, and most of the time they represent the entire bear market accumulation, right? So here's the uptrend in the bull market, and then here's the bear market accumulation and markdown. So both the markdown and the accumulation, rather. And actually breaking this is not just breaking the bear market, but breaking this entire trend that since May of 2021. So when you're breaking these purple boxes, sometimes you're talking about 600 plus days, right? Here it's 637 days more or less, because this is a weekly chart. 637 days of resistance broken to the upside and then retested as support. Guys, do you know what that means? Again, here, to be a good trader, I believe you can't do the whole could go up, could go down thing. That's if you want to you want to work extremely hard and never leave your desk, and you're going to make small margins, and you're going to have a lot of error. You're going to be day trading. You're going to be trading high frequencies, right? So you're going to be a high frequency trader, a lot of margin or a small margin for error, and you just got to make sure that, your 2%, 3% margins of win rates accumulate. So that's, I think, not a very efficient way to go about being a successful, profitable trader, okay? But the best traders, in my opinion, they zoom the hell out. They make the work easier, and they take advantage of once in a lifetime opportunities, because you're not always going to get these moves where for years it went up and for years it went down, and now you just so happen to be exposed to the market. You just so happen to be in a position where you have money to invest. You just so happen to be paying attention. This literally only comes around once a decade. And, maybe the next decade, this happens. If it happens the next decade, who's to say you're not in a position to invest? You're not at a place or time in your life where you can sit down at a desk, right? Maybe your country's war-torn or something. Or, you know what I mean? Or you're just busy. You're just dealing with other things. I remember when during 2017 bull run, I was busy taking care of my son who just came to life. I wasn't thinking about crypto. I didn't care about crypto. I had some crypto, but I didn't give a hell. I was mostly focused on feeding my son, taking care of him, waking up in the middle of the night, working with his mother to make sure that he was okay, because it was my first kid. You understand? So it is kind of once in a lifetime stuff. I think the smart trader recognizes the fact that this move right here, you don't get every day. You do not get that every day. You guys been waiting. When moon? Like, answer the question on your own. Open your charts and look. Set your support and resistance levels on a high time frame. Not that difficult. Just play with the connect some lines, and look at what's going on. If this is broken and retested as support, it's over. It's done. That's it. That's the game. If you know anything about charting, this is it. You don't have to know anything else. You know nothing else about this chart. You know that you buy here or anywhere over here, it's over. It's over. And it's so great. It's so great. Literally, this is a once in a decade move. It literally took 650 or some odd days, maybe 600 to 650 days to come down and reaccumulate after that move up for this asset, Telcoin. So please understand, I say all this to mean, please understand the magnitude of these breaks. This is not something you get every day. There's so many ways to look at this. Look at that. It just came out. It did accumulation, right? Just like the accumulation that Bonk is in. it marked up, okay? Right, remember, this is the cause, this is the effect. If you knew anything about, charts during this time, you knew that this yielded that, and you were ready for it. But this is corrective, right? Why? Maybe corrective, maybe impulsive, I'm not exactly sure, because this is 5 waves up. Oh no, this is definitely corrective, because look, how do we know it's definitely corrective? The time factor. This took around that much time, and this has taken so much more time. That doesn't happen unless this is a zigzag, a corrective zigzag, okay? So there are a few things you know. One, the next wave is going to be purely impulse, and this asset, Telcoin, has never ever in its whole entire lifetime on a high time frame, on this time frame, on the daily time frame, has never experienced pure impulse. This was 5 waves up, granted, but this was 5 waves up in a zigzag, meaning after the accumulation, you hit another zigzag, okay? And you came down, even though you came down in respect to the 0618 of these 5 waves, it took you 600 plus days, okay? So not only will you go up in a purely impulsive wave for this first wave of impulse, but you're gonna go up in such a way that, you're just gonna go up. You're gonna go up in a purely impulsive wave. That's pretty much all that tells you. So yeah, guys, read your charts. Understand why we're so bullish on a high time frame, and why really there's nothing to worry about. If you're exposed, you're pretty much going to make it. And that's what a smart trader does. I believe a smart trader sees that. And the worst of the traders, I don't care. If you're... The worst traders are going to say, I don't know, could go up, could go down. It's going to go up 10%, they're going to sell. Maybe they buy again. They get stopped out. They buy again. Sell. Buy. Sell. Buy. Sell. Sell. Terrible trader. Terrible trader. Because you're literally throwing money away. This is a can't miss trade. All you got to do is sit on your hands. All you got to do is get out of the way. All you got to do is do nothing. But yet you can't help yourself because you don't know any better. The worst traders. Even if they happen to be profitable, they'll cut their margins by a large fraction of what they could have made because they can't get out of their own way. They only have one style. They don't know anything else, right? They know how to range trade, and that's it. They don't know what an impulse is. They don't know what a trend is, and they can't take advantage of a trend. And that's actually where all the money is made. Divergent Trader on Twitter, he said something this morning saying, the paradox of trading is that the only way to make fast money is slowly. Okay? Like, the only way to make fast money is slowly. Meaning, you have these experience, or you have these opportunities and you notice these opportunities, and then you're in a position to take advantage of these opportunities. This all took, let's just talk about this, all took 600 some odd days. Let's say you waited those 600 some odd days, which a lot of us did. Now, we waited 600 days to make life-changing wealth, where it's essentially an up-only trade, because you're not coming back down to these levels, right? Because if this is pure impulse, what do we know about pure impulse? You're going to go up in 5 waves, and then you're going to come down in 3 waves, but you're going to respect the 0618 Fibonacci retracement level of those 5 waves. So any kind of any investment at these levels, at least in the near future, is not going to be is always going to be in profit. That's what I'm trying to say. Okay, and the best traders realize that and recognize that. Sadiqer Rahman says, "Can you do a VRA chart, please?" Okay, we'll have a look. All right, so that's Telcoin. Let's go on our 4-hourly. Yeah, guys, imagine being bearish on this. Imagine being bearish on this. At resistance, you consolidate at resistance, you break resistance, you retest it as support, and you just keep going. Again, the purple box, which represents the bear market accumulation, confirmed at this point to be support. Just close your eyes. Don't worry about if it goes left or right, chops up a little bit. This is free money. It's free money. It's easy. Just get out of your own way. Don't be like most YouTubers who can't stop trading. They put a trade in every day or every other day. You just sit in your positions. You know, a lot of these influencers don't know how to trade, unfortunately. Very few have positions that they just keep. And yeah, some of them have spot positions. They have some Bitcoin and Ethereum, but then they're trading on a small time frame, even on leverage, and they trade in and out, trade in and out. That works in ranges. It doesn't. That's literally the worst way to trade a trend. In a trend, you buy a certain level, protect that level, protect against downside risk, and you let it run. That's how you do it. I'm speaking from experience. I've done the other way and made pennies on the dollar when I could have multiplied my investment manyfold. Again, breaking high time frame resistance, testing it as support, and you're doing it again here in this consolidation reversal. Nothing bearish about it. This harmony has just put in this trend, and the trend is your friend. And look what happened. You come back to support, and right at support, you're going up. Again, so many ways to play this. You can buy this, which would have been the best buy. You could buy anywhere here during the bear market accumulation, 300 days of sideways price action, or up. This is a little more risky, just buying every time you're on support. Okay? Because eventually it breaks up. But these are a little more risky, again, because you don't know how the price can chop up and down. And then at some point, yes, you get one of these, but then you keep going up. So, you know, the longer you wait, the higher the risk becomes in trading these trends. It gets more risky the more you wait. The more you wait, because the further you get away from the high time frame support, right? And this is the high time frame support right there. MOVR, same shit. High time frame support broken, retested as resistance, retested as support over here. And then now you're putting in an uptrend. That uptrend is unchanged. You're just going up, 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 up. Yes, you're chopping, but you're going up. Zoom out. There's nothing at all bearish. There's zero bearish things on this chart. People pull out their indicator 5000s and tell you, but there's some bearish. There's on the 3 hour, on the 3.5 hour time frame. There's some bearish. What do they say? Divergence. Like, that's all bullshit. Look at the chart. Use your indicators corroboratively, or else you won't know what you're doing. You're just going to confuse yourselves. Look at the price action. Look at the story that the chart is telling you, and 9 times out of 10, you'll have a decent idea as to what's going on, and then you can use your indicators to help if there's some confusion, or to get some confluence, some confirmation of your trade thesis. But if you go into the indicators, it's really confusing. Why is it confusing? Because indicators don't always know. For instance, I was listening to a live stream this morning, another crypto YouTuber saying the 4 hourly is bearish. Why? Why are they saying that? Because for them, this is where you buy and this is where you sell. And you don't buy again until you get back to these areas. But what they don't understand is that in a trend, the momentum indicators are not always accurate, right? The momentum indicators can go like this, okay? So you don't want to be over-reliant on The fact that the 4-hourly momentum indicator is crossed bearish and going down and expect it to come all the way down, a good savvy chartist just looks at this trend and says, this is support. If I want to buy, I'm buying at support, and I'm expecting a move from there. Do you see what I mean? Guys, I'm not trying to disparage anybody. If you guys are, if you're my colleagues, you're watching this, you know who you are, just, I'm not lying, right? If you only know how to read indicators, you're over-reliant on indicators, you got some work to do. I'm just saying it how it is. You know it too. I was there. I was you. Trust me. I was to the point where if I didn't have all my EMAs on, I didn't have my momentum indicator on, I didn't check in with this indicator right here, this technical indicator, I felt naked. I felt like, I don't know. I always second guess myself. It could go up or it could go down. I was that guy. You don't want to trade like that. And you're doing yourself a disservice because you guys know better. You have the skills. Just, take the training wheels off. Nobody's saying indicators are bad. It's just, if you can't call stuff without the use of your indicators, you can't really do proper analysis. Let's be honest. You can't do it like that. Let's just have a quick look back into Bitcoin. And it looks like that 0618 that we were saying has held. Okay, at least, right? If we're looking at it and we're postulating that this indeed is an impulsive trend, and this is a subsequent three-wave retracement of this impulse, thus far we've respected that 0618 Fibonacci retracement level. So, we are looking for a bounce here, but thus far, yeah, it looks like that was the correct read. We'll see, though. We'll see. If this is purely impulsive, it's got to go sooner than later. Why? Because, again, the time factor. According to Elliott wave theory, wave 1 and wave 2 take about as long as one another to form. So you got 2 candles on the hourly to go up. You got 2 candles on the hourly to come down. So this means that if this is impulsive, we should expect a move up now. Okay. So that's pretty much it. Let's look at VRA for our friend Sadiqer. Let's see. So VRA is down here somewhere, yeah. Okay, so let's zoom out a bit. Let's zoom out even more. Okay, this is nice, very nice. And again, this is what I'm saying. You don't get this kind of opportunity every day. This next bull run that we've already started, unbeknownst to most people who can't read a chart on a high time frame, it may be a fake out. Like, this is years in the making. Okay, this is going to be one of those, like, oh, I was in crypto, and so I made, a decent amount of money. Again, 630 days as counted on the weekly time frame for all of this 3-wave move. We know, according to Elliott wave theory, these corrective waves come in flavors of 3. That's an ABC flat, or no, this is a zigzag, but this is an ABC correction, right? 5 waves up, 3 waves down, and the trend continues. If you can't read a chart, even if, let's say you don't know anything about Elliott wave, right? But I think I feel like even if Elliott wave isn't your system and your expertise, I feel like everybody should have a rudimentary understanding of the wave principle, I feel, okay? If you're like a serious professional trader, okay? So I think everybody who has a decent amount of skill understands that this trend right here is on. There is no such thing as, oh, it might be a bull market, it might be a bear market. Like, this is a weekly chart. You've put in 1, 2, 3, 4, 5, 6, 7 straight weeks after posting 3 waves down. 5 waves up, 3 waves down. You're going back up, okay? So on a high time frame, it's very, very clear, okay? It's very clear what this is exactly. And also, you know, for those who aren't sure that it's a 5 wave up, 3 wave down type situation, just pull a Fibonacci retracement level. 5 waves up, 3 waves down, respecting the 0.618, which you expect, and you continue. Now, question is was this 5 waves up purely impulsive? Answer, no, it couldn't be. Or it's unlikely that it was, because it seems like the time it took to go up for 5 waves was a lot less time than it took to come down. Just like we saw in Telcoin, the time of the retracement indicates that this is a zigzag, a corrective move. So you get a 5 wave, 3 wave, 5 wave sequence. So essentially what you want to do is on a weekly time frame, count 5 waves, which would equal to the first Elliott wave on a high time frame for this asset. Okay, so basically you're printing wave 1, cycle wave 1. Okay, the first ever wave. So if I wanted to count this on a high time frame, I'd count that as cycle wave 1, what we're in right now. And this is the first wave of cycle wave 1. So primary wave 1, primary wave 2, primary wave 3, primary wave 4, primary wave 5. So that's what I'm reading on Veracity. Really, I wouldn't overcomplicate it. In terms of when to take profit, go on a high time frame, like a monthly, and wait until that momentum indicator gets up here. That's one way to do it. Okay, obviously, I would use a combination of the monthly stochastic RSI monthly momentum indicator and trying to count 5 wave. Again, trying. It's not always easy, but both. I would corroborate both a 5 wave read and an exhaustion of the momentum on the monthly time frame. Then I would take profit at wave 1, because you know, if this is cycle wave 1, right, then wave 2 is going to take just about as long as it took to come up and come down, about 61.8% of your gains, and you don't want to lose that. Another way to do it is, assuming we put in, this is a big assumption. I wouldn't do this. I would not do this. I think this is entirely too risky. But you can always wait for the initial break of structure and then sell on the B wave retracement. But I think that's too risky. But that's one way to do it. Because sometimes, why is it too risky? Because you may get something like this, a zigzag, where you never make a higher high. So anyway, that's Veracity. All right, let's look at the DXY, then call it a stream. Okay, so yesterday I was saying that the DXY is not bullish. Most people are misreading this. They're saying that, oh, it's the most bullish chart, you know, in all of finance. It's going to the moon. But they are not, for some reason, reading the fact that this asset, this dollar currency index, is at resistance, and it's not consolidating at resistance. It seems like it's distributing at resistance. Okay, so let's zoom in. So again, this is 78 days worth of this is a 78-day trend, and you have 3 touch points. This is the 4th touch point, where every single time you touch this, you reject off of it. Okay, so that's like the high time frame analysis. You go in, and what do you see? You see that you're putting in this range right here. Let's go on the 15-minute time frame. So a lot like Bitcoin. Again, a lot of times what you see Bitcoin do and the DXY do, they're inverse. So Bitcoin is putting in an accumulation range at support, right, on a small time frame, and this is looking like it's doing exactly the opposite. It's putting in a distribution range at resistance. Okay, again, this is resistance, 78 days worth of data proving that this is resistance. And here you can see, instead of 2 degrees of AB basing and a pivot to go up, it's 2 degrees of it's 2 degrees of AB basing and a pivot to go down. That's your first degree right here. This is your second degree, and I believe that this is your pivot. So this is your initial breakup structure. Okay, just like this is exactly it, right? Look, this is your initial breakup structure, and after that, just like in Bitcoin, you got this composed flat correction. Do you see that? A, B, C. And now this is the pivot down. More than likely, this is what you're getting. So again, accumulation and distribution, they're two sides of the same coin. If you don't know what I'm talking about, look up Wyckoff. I am not a Wyckoff trader. That is not my point of expertise, but I think if you're serious about trading, if you're serious about charting, you should know these basic concepts. You should know a little bit about Wyckoff, a little bit about Dow, a little bit about Elliott Wave. Although you should pick an expertise, you should pick a system to master, or to try to master, to trade with, okay? But again, Wyckoff explains this so eloquently in his distribution of ranges. You know, you have the supply marked up, and now it needs to go through distribution before marking down. Okay, so that's what I'm seeing with the DXY. So nothing bullish about this to my eyes, especially given this really strong move and really showing that this is the direction that price has chosen to go, right? And this is the counter right here. Very weak counter, strong initiator, a weak counter. Every corrective wave has a counter. This is the corrective wave of the pivot. This 3-wave flat correction is the counter. So that's how I'm reading the DXY. So yeah, and again, price action first and foremost, and we can use the indicators to corroborate that. On the small time frames, our indicators are doing just that. All right, on 15-minute time frame, we're not completely topped out, but you see the momentum is going up even though we're not doing much. So you can see that the momentum to go up is exhausted because it's moving up even as we're going sideways. That's not a good sign for bullish momentum. Okay, on the hourly time frame, you can see that the momentum is already overbought. It's already moved up all the way. So it can't go up that much further. Obviously, it can range a little bit, but it's pretty much topped out. On the 4-hourly time frame, the momentum is moving up and it's crossed bullish, yes, but it's crossed in such a way that you wouldn't be surprised if it doubled back down, okay, and created what looks to be strong bearish divergence, right? These two tops, like that. So that's what I'm seeing with our momentum indicator. I don't think that TradingView gives you, they don't give you momentum indications for the DXY like they do for Bitcoin and other assets. But that's what I'm seeing on the charts. Guys, that's all I got for you today. Hope this was helpful. Hope this was useful. Like, share, and subscribe as always. And I will see you tomorrow. Take care.